Hello, welcome back. We're going to be doing another trade review today. This will be the trade I took on Thursday of this week on the S&P 500. This was a $7,000 win, so it was a very nice trade. And yeah, let's get into it. So we're here on the S&P September contract on the daily time frame. And so let's start from Monday this week. So this candle here is the Monday of this week. So the closure of this candle here, that's where we ended last week. So as I'm looking at this, and as I was looking at this before this week, we can see that we'd been moving higher for all-time highs. We dug up here a few times, sort of breaking 3 highs, or 2 highs, this high, then up again above this high. So we've dug quite deep into all-time highs. So it's a fairly safe assumption that we're going to come down for some sell side after that, which is exactly what we did. We came down, took this sell side, rebalanced the fair value gap, and then we had a big shot lower, taking this sell side liquidity pool and taking this sell side liquidity pool. Let's mark those two pools. So yeah, we dug lower and we'd stopped very nicely at this daily fair value gap. The body closing nicely inside of that, and we got a little bit of a wick past that. And then we'd ended the week with a slight retracement. And we have this big old gap here, big fair value gap with the volume imbalance. So this white box is including both of those. And yeah, Friday's candle was unable to get up into there. So starting the week, heading into the Monday, this fair value gap is quite an obvious target. I want to see it, it doesn't have to be much, but I want to see it at least touch this, and then we'll sort of make a decision from there as to where we think it's going. If it sort of gets through this and closes above it, then yeah, we could come back down in and use it for bullishness, continue coming for new all-time highs, or if we come up into it, then get some form of break of structure lower, then that probably means we're going to be coming for the next level of sell side. And obviously we can see that's exactly what happened. We came up in, filled it completely, and then we came lower and ended the week by taking this sell side and quite a bit further. But obviously, start of the week, we don't know that. So let's go down into the 60-minute time frame. So each of these black lines represent one day. So this is Monday, Tuesday, Wednesday, Thursday, Friday. Big week of news this week. So Monday we didn't have anything. Tuesday we have dollar high impact news. Wednesday we have FOMC. Thursday we have more high impact dollar news, unemployment claims and PMI, and then Friday we have NFP. So it's a big week this week. We're expecting a lot of movement, particularly from the Wednesday onwards, because that's when we have FOMC, unemployment claims and PMI, and then NFP on the Friday. So let's look at what we did on the Monday and Tuesday. So we opened up, these two blue lines are the new week opening gap. So this is where we opened. We started coming higher. We just tipped this high and just came up into this daily fair value gap by a tiny little bit. And then Tuesday we worked our way lower, and we weren't able to crack this low, but we made relative equal lows. I think Nasdaq did actually take this low, but S&P had made equal lows. So pretty much heading into the Wednesday, we've got a pretty defined range here. We've got equal highs and equal lows. So Wednesday opens up and we immediately run higher. We take this buy side and we climb very high up into this daily fair value gap and the volume imbalance. We stop just short of completing that high. So let's go down to the 5-minute. So let's look at the Thursday news. So Thursday we have some good news, but it's quite early on in the day. Last big bit of news is the PMI at 3 p.m. So, getting to around 3 p.m, look at what we've done. So this is 2:30. This is when the S&P opens up for the day. So we get a lot of volume at this time. So as you can see, we've set some equal highs just below this level. So we run these highs and we touch the very top of this level, and look at the reaction we get off that. We come tiny bit higher, but this level up here is a brick wall. We've filled that in, and then we immediately get displacement lower. So as of this point, I still don't have a very solid idea of direction. You know, we could still come above this and use it as support, or we could touch this and come lower. Typically, if you want to see it come lower, you want to see it leave some of this open. So to be honest, when we're here, the fact that we've come all the way up to close this probably tips more towards bullishness. But obviously, you know, you want to wait and see what kind of reaction you get off this, because it is allowed to fill in the gap. It doesn't have to leave some of it open. It's just nice to see if you're bearish. But yeah, so we touch this and then immediately come away from it. That is a really good sign for bearishness. And so the only point when I become interested is once we've paired the liquidity we've taken. So we took buy side here and up into a premium array. We then rush lower and we take this low here. Now on the 5-minute chart is where I started my sort of analysis with before I took this trade, and I'd seen we'd touch this, we'd come lower, we'd just taken this low, and we had a big wick on this candle here, not quite getting up to here, but you know, almost immediate rebalance, and we'd had quite a low close. And I love that signature, particularly when we've just paired, because in my mind this is us moving lower, we've got displacement lower, we've taken sell side, this has offered some form of relief higher, so it's offered the retracement, and then you can imagine on the 1-minute time frame, or just any lower time frame, we'll get some up close candles in here, and we've probably got some form of break of structure lower after that. So we've probably got some 1-minute bearish order blocks in here. So we go down onto the 1-minute time frame. Where are we? Yep, here. So yeah, we've touched this level, got some displacement lower, fair value gap, rebalance that, move lower, we retrade to the bearish order block, and then we get a big rush lower. We take this sell side and this sell side in, you know, a couple candles. This really does run lower quite quickly. And yes, I know we don't take this by much, but that's not really the point. The point is we rush down for this, and it's not until we get to this that we then get a slight retracement. So we get big rush lower, and then we get a retracement up into closing this fair value gap and just touching this fair value gap. We almost got to consequent encroachment of this, but not quite. So we take sell side, we offer some relief higher up into a fair value gap. There's also this one here, but we can view this as a breakaway gap because it's the first fair value gap of this displacement run lower. So if we're bearish, I'd like to see this stay untouched, which is exactly what we get. We get this one almost being halfway filled in. We then get another run lower, creating a bearish order block here. We take this low, yeah, by a tiny little bit, but it's not too important. But remember what I said on the 5-minute, we had that 5-minute wick, which probably means we've got some form of bearish order block on the 1-minute, which is exactly what we've got here. Now, I wasn't looking at the charts at this time. I think I looked when we were about on this up candle here. So we create the bearish order block. We get a very deep run into this. Typically, you wouldn't want to see a run this high up and close this high onto the order block. But you know, I'm not looking to take a trade yet. So at this point, we're just observing. If this was to come higher, which after this close, I might be suspecting that we were coming higher, you'd want to see this next candle at the very most come down for immediate rebalance. Maybe, we've got a tiny volume imbalance in here, or two of them. Maybe you'd want to see it come touch these, but you definitely wouldn't want to see it close below this if this was bullish, because we get the closure above mean threshold of this, which usually means this is no longer valid for a bearish order block. But the fact that this candle comes and closes all the way down below that, this is now a propulsion candle. So at the moment, I'm now really liking this for bearishness. We've taken buy side, we've touched a premium array, we've had a very strong reaction lower off that, we've taken sell side, offered relief, had a break of structure lower that's now been reinforced. So we've had a break of structure, we've retouched this bearish order block, and we've had another break lower off that. All those things together mean we are pretty confident that this is coming lower. The probabilities of this coming lower are much higher now than the probabilities of this coming higher. So, we get this closure below here. Next candle closes below this. So right now, these three up candles can be viewed as one bearish propulsion candle. So we draw a line there, and that's now where we're looking to enter. Where is our target? So we've taken this sell side, shown that we want to continue coming lower. So the next thing we do is we zoom out and we find the very next sell side liquidity pool, because that is our next target. So I placed a limit entry on this candle here. Let's get the executions up now. So you can see you got entered just above that. Now where does our stop loss go? Safest place for the stop loss is above this high, or above consequent encroachment of this fair value gap. So maybe up at 5,582.75. That's probably the safest place for a stop loss. However, that's a pretty shocking risk to reward. I'm not looking for that. I don't look for anything less than a 1-to-1. So, where else can we place a stop loss? Could place a stop loss above the high of the propulsion candle. That's also a safe place. But yet again, we're not looking good there. So, it is a bit more risky, but the last place we can put our stop loss is above mean threshold of the propulsion candle. Now, mean threshold, in an ideal world, you would see price come up to touch mean threshold, but not come any higher than that if it was respecting the order block. You'd want to see it at the very most touch it, and then not go any higher past that. It should act like a brick wall. Obviously, you don't always get that every time. Sometimes it will wick quite far past it, but you should at least get the bodies to respect it. So with a stop loss above mean threshold, we are risking a long wick, but we hopefully should see it act as quite strong resistance. So it was a fairly risky place to put a stop, but given how far away our profit is, I can't afford to have anything higher than that. And yeah, even though it's fairly risky, with this kind of setup, we've had two moves higher, so we can expect some quite fast delivery lower. With this big strong candle lower and this big strong candle lower, you're only really expecting it to sort of tip this and then continue coming lower. So, it's a bit situational. In a different situation, I might not have felt confident doing that. But in this situation, I was fairly confident we weren't going to come up too high. I didn't even want to see it touch mean threshold, which it didn't. So yeah, my stop loss is above mean threshold of this propulsion candle. Now, we touched my entry, and then immediately I got good feedback. We came up, a bit higher than my entry, but then we immediately slapped lower. and then the next candle opened and was really hunting lower. So at this point, I zoomed out a bit further, and I thought, okay, it's probably, well, it's definitely going to come for this low now, is what I'm thinking. Let's see if we can extend it and try and get this low as well, because it's just the next sell side liquidity pool. So I moved my profit down to here. I took a big partial when we got here. I entered with 25 contracts, and I took 20 off when we got to here. So, you know, even if we don't get here, I've taken most of my profit. And so at this point, my stop loss is now break even. So we get to our target, or our first partial. We then offer a retracement, which is allowed to do that, but because I want to see heavy bearishness, I don't want to see too much of a retracement. And that's exactly what happens. We take our partial, get the retracement, and then continue staying lower. Now, once you've taken a pool of sell-side liquidity, I typically like to see every time we make a new low. So, for example, every time it comes lower than the previous candle, I like to take a little bit off, because we might not get all the way here, but if you're taking a partial every time we make a lower low, you're pretty much going to guarantee that you're getting the lowest candle. If it doesn't get all the way here and it turns around, every time it makes a lower low, you're probably going to get a partial on the lowest candle, aka the most amount of money. So yeah, I take a partial when we get to here. I take, out of my remaining 5 contracts, I take 3 off when we get below this candle. I take another 1 of my remaining 2 off when we get below this previous candle, and then I take the final profit off when we get to my target. Now obviously you can see this continued to rip lower. You know, if I was feeling confident, I could have had my stop all the way lower here, but you know, that's not necessary. That's greedy. I made $7,000 from these partials. I don't need to try and stretch or extend it for much more than that. In total we got 31 ticks, or you know, my first partial was 21 ticks, and that's all we needed. So let me talk through dollar. So what I was thinking from dollar at this point, because I like to look at both dollar and whatever asset I'm looking to trade with. So let's go to the hourly. So this week opened up around here. So from the previous week, you can see we've got quite a big consolidation range. We'd taken this buy side, taken the sell side, and then we'd been sitting in the range. So we open up this week, we take the buy side of this range, and we've taken the sell side of this range. So then Thursday we open up and we come and attack this level of buy side, because the most recent thing it's done is it's taken the sell side, retraced, taken sell side again. So first thing we do is we pair this sell side with buy side liquidity. It's all pretty standard. Let's go down to the 15-minute or the 5-minute time frame. So Thursday we've opened up, we've taken buy side. During the news, we've had one run lower, taken a few sell side liquidity pools. It's offered some quite a high level of relief off of that to squeeze out anyone that went short in here, and then we've shown that we want to continue lower. So this level of sell side is in our target, accompanied with this 5-minute fair value gap, which is exactly what we come for. We come for this low and we fill in this gap. We don't get much lower than that. And this is at 3 p.m. we're doing this. So my entry for this trade was at 3:16 p.m. So this is right when I'm looking at taking a trade. And so, to be honest, all my analysis was we'd taken buy side, we'd taken sell side. I didn't know if it was going to want to continue lower after taking this, and I didn't know if we were going to be long-term bearish, or I didn't know if it was taking this sell side as a retracement lower to then continue higher, which is obviously what it did. It came down for here and then came up for this buy side. At this point, I didn't know that, but I didn't need to know that. All I'd seen is that we'd had 2 runs lower, And so simply, all I was expecting after we take sell side is I want to see some form of retracement higher. I didn't know how far we were going to retrace. We might have only come up into this fair value gap, then gone lower. But I'd seen we'd filled a gap, we'd taken sell side, and all I was expecting was some form of retracement higher. So offering some form of relief after taking the sell side. And with higher dollar, not always, but should come lower S&P 500. And so with this, these signatures on S&P, where I was very confident of lower prices, all I needed was a slight indication of bullish dollar. I'd say percentage-wise, probably 60-40 in the way of bullishness here. All I wanted to see was some form of retracement. Very confident in bearish S&P, therefore I like the trade. You don't always have to know exactly where the assets are going. Sometimes you just have to have a rough idea. Maybe the odds are only slightly in your favor, but that's all you need. It doesn't always need to be, ticking every single box to perfection. But anyway, there we go. That is my $7,000 in 3 minutes trade from earlier this week. Hope you enjoyed. Thanks for watching. Goodbye.